Good morning. Welcome to Pries Capital. You must be the new recruit.
Oh, is this the new recruit?
Yes, it is.
Awesome. Follow me, Mr. Superstar. Here at Pries Capital, we love showcasing art. The stunning bronze dragon sculpture Kiko by the renowned artist Nano Lopez is definitely a showstopper. And these pieces on the walls, the legendary Michael Godard is practically a rock star in the art world. There's art all over the office, creating a vibrant, creative atmosphere to work in and collaborate in. And here is Tyler Pries, our hardworking mortgage loan officer. If you're looking to purchase real estate in the Myrtle Beach area, Tyler's the guy to know.
Looks like you have your hands full. Ashlyn, can you grab a book for him? And I'll see you at the meeting.
And here's Raj, one of Jason's right-hand guys for commodities trading. Good morning, Raj.
Good morning.
Meet the new recruit.
Hi. Hope you like to work hard and play hard. This is a high-stakes environment. Split-second decisions can make or break an opportunity. Welcome to the firm.
Don't worry about Raj. He's a quiet powerhouse, but he's critical to everything we do here. And here's the founder and real estate powerhouse herself, Tina Price.
Good morning. How are you? So glad to have you with us. Can't wait to see you in action. We're just about ready to start the meeting for Jason's market analysis. I will see you both in the conference room.
Good morning, Jason. This is the new recruit.
Hey, welcome. We're glad to have you here. Your skill set is exactly what we need. I love people dedicated to their craft. But hey, I got to get ready for this morning's analysis, so I'll see you in a bit.
Thanks, Jason. You're awesome. Right here, we have one of our many conference rooms. And down the hallway over here, we have the intelligent and sharp-eyed Miss Jill.
Why, thank you, Ashlyn. Nice to meet you.
Jill thrives in the world of spreadsheets, balance sheets, and financial forecasts.
You'll fit right in, so go check out your new office.
And here's your new office. And over here, we have some welcome goodies for you. Just a small thank you of saying welcome to the family. Okay, so I've got to get ready for the meeting, but check out the gym over here, grab some coffee and bagels in this room to the right, and then I'll meet you in the conference room.
Good morning. Thanks for joining us. Go ahead, take a seat. Welcome back to another morning market analysis. Let's get comfortable and dive in.
Yesterday is that kind of session that makes dip buyers feel invincible. Price just kept pressing higher and right from start to finish. And that's exactly why today matters. After a sustained push like that, the crowd's instinct is simple: buy the pullback. The problem is most traders end up buying the wrong pullback, too early, too high, or right into the level where sellers start waiting to punish impatience. The opportunity today is not chasing strengths. The opportunity is waiting for the market to give you a clean pullback. Good morning. Welcome back to another Team Day Trader edition of the Daily Market Analysis. Let's settle in, grab your coffee, and let's prepare for today's trading session. As always, take a moment if you're new to subscribe and explore the resources in the description below. How are you guys this morning? How's William? It's the only person in the chat. Hey, you had spent time with your sister this weekend. Good, man. Yeah, Paolo's tomorrow. They're already in the lockout period. So, well, I'm glad that you had a good time. Good weekend. Anyways, I got a couple of stocks that I want to take a look at, being the beginning of the week. A couple opportunities besides day trading the ES. And we'll take a look at that. If anybody wants me to take a look at anything else, then throw it in the chat and we'll see what we can do. Really as far as the dashboard from Y charts, nothing. There's nothing that's on the economic data as far as today that's market moving. Right, this week is loaded with a lot of earnings. Although nothing here really pushing that I see before the bell. More stuff that I see after the bell. There's a couple stocks after. What is it after? Not looking at any of these. I don't know why they got, what do we got here? Texas Instruments down here at the bottom. You guys probably can't see that there. There we go. Right. I am looking at taking an eye on Seagate. I know they is later tonight after the bell. I mean, it looks like a lot this morning, but nothing really moving the markets. So, and I know I didn't see that healthcare was kind of getting hit a little bit as we open up. You had United Health Group getting hit, Humana and CVS all getting hit here pre-market. But there's nothing, price action in the futures are up, so, but they're not moving. They're just trading in a sideways range. So we're going to take a look at that. Again, nothing on the calendar that I see today that's market moving. I only kept this up, and we're only going to talk about it because tomorrow's the big excitement with the FOMC. That's really the big, that's what everybody's waiting for. That's going to also settle in today's trading, right? Because tomorrow is the presser, we're going to take a little bit deeper dive into understanding how that plays out, market tempo, what realistic expectations going into today, right? There was a nice push yesterday, really from Sunday and the overnight, right? Like Sunday, we opened up gapping down, but then as that overnight session played out, they recaptured it, and then we opened up and really taken off. So if somebody counts from the Sunday open at 6 on Sunday on the futures, that's been a nice move, really from 68.80 all the way up to 7,000. Yeah. So with that said, like I said in the beginning, we're going to dial into the morning market analysis, but that big move is going to play a big role today as well as tomorrow with the FOMC. Just to, again, clear this up. We do this every day, right? Nobody's expecting anything tomorrow. The next cut is in June. That's still in play, and the next one after that is in December. And so, right, we still got 2 cuts. Nothing's changed. That's still on the docket. It's going to be kind of what I would consider fairly boring as far as that one comes from the Fed for the spring here. So, yeah, I think tomorrow we'll get a little bit of more information out of the presser. I'm going to see I'm sure there's questions. It's going to be with that whole, his YouTube video on, the dealings with President Trump, yada, yada. So we'll see how that handles it. We'll see what he says and how the market kind of, takes that. I'm kind of curious and how he's going to maneuver and dance around the questions. It was him who created that YouTube video, right? So he is where they say, hey, they don't let politics kind of play into this. He is kind of playing a little bit of political theater. So, just wondering how he's going to dance around that going into the presser. Because usually whenever there's questions about politics, they usually try to stay out of it. But then, with him making a big splash and scene, that's not really staying out of it, right? That you're kind of playing into the political theater. So I'm very curious tomorrow. So we'll get some answers on that. There's nothing here or there for trading in today, but I just wanted to kind of go over a couple, as per usual, the dashboard, like we usually do in the morning, just kind of get an idea sense of, is there something that we're not really seeing? So with that said, as of 7 o'clock, right, futures were up 20 points. We're at 15 3/4. The overnight, I am queuing this in because I think this is important. Is this overnight action has a very strong net long volume delta of 5.17. So there is a lot of overnight inventory that is net long. So what does that really mean? That has a high propensity to get a long liquidation in that first hour, right? Your IB of trading, right? Where you just kind of wash out those strong late longs into the market. So I am it's either that. I shouldn't say that. So it's one of two, especially when it's strong. When it's strong like that, you're either going to get a long liquidation, right? Or they are correct. Of the late longs are correct and they're rewarded, and it is like a kind of chased the market environment. I usually lean on the only because I'm always thinking of my own personal risk, right? Managing risk. I'm always looking for the pullback, right? That's what we kind of talked about, right? In the intro was that pullback. So, but this is important to note. And if you journal long enough, right, these, understanding how these days play out and what is the potential, really is important off the open. So we'll get into that as we get into more and more granular on the charts, but that is something to note, and you should be writing it down, or hey, take a screenshot of this, however you want to do it. But 5.17% net long volume delta, the skew, that's a very strong skew in the overnight. We are opening out of balance, and the 10-day ATR is 68.5 points, right? There is a possible gap. It's, yesterday's high was 69.95 and a quarter, and we're trading at 69.98. So possible small gap on the table. I don't want to put a lot of emphasis on that. Again, whenever you're thinking of that small gap, right? Do they just kind of open up and you get that opening drive, piercing, like an opening drive pierce, and it's a gap and go, right? Or as it goes, right? Like gap and fade and gap and chop, right? So understanding the conditions before you commit any size, that's very important. And that's, again, the things that you should be doing as a trader is understanding those conditions, right? So gap rules are in play, right? So again, my initial trade is day trade setup 1. That's a gap trade setup. So I am, I'm just making reference that's kind of the, if I was going to take a trade off the open, that's going to be the trade setup. If I miss it and I don't see it correctly, then, no big deal, because I'll be trading day trade setup 6 and day trade setup 4, to be one or the other. So day trade setup 6 is kind of where I'm leaning first. We'll talk about that more in context. And then again, as if I'm wrong in day trade type 6, and that's right, then day trade type 4 becomes in play. So if I'm wrong, I get stopped out, I put a position on and I get stopped out, I have to watch and make sure that I am reading it correctly or not correctly. And if I'm not, and 6 isn't playing out as it's supposed to, then it will transition where 4 is the play. So understanding that and watching that, we'll kind of talk about that as we get to the trigger chart. Key levels to watch. The one thing I'd skip this whole first paragraph, right? So again, context. This market, I'm treating this market as bullish, right? Where we got bullish market pressing into a range environment, meaning I'm not interested in buying the highs, right? I want a large pullback into key levels that forces weak hands to fold. Then I'm going to step up where the market proves buyers are absorbing, right? So again, this is where the bear trap pullbacks are born, and this is the best risk to reward trades that show up. And again, I'll, specifically talk about how I'm seeing that play out in today's price action. Key levels, we've talked about this level for a while. It still is a strong LVN on the chart, 69.70.50. You did have single prints, right? Wash through that. That's very typical of LVNs. You're either going to get a strong push through where it doesn't spend a lot of time and price at that level, or that is the inflection point of of price, and I'll show that how that works. And so that still is definitive on today's trading. Like that 69.70.50, it already got tested in the overnight. So watching them get that juicy pullback, and if we can tag up again at 69.70.50 as a 2-try and they hold, right, that goes back to that absorption that I was talking about somewhere in here, wherever I wrote that right here, where the market proves buyers are absorbing. So 69.70, again, we've talked about on Friday, last time I saw you guys, we do know exactly where that 69.44.75, if that 69.70.50 doesn't hold, right, again, just like Friday, think of that 69.44.75 as being a magnet that'll pull price to it. Again, they got to prove it, right? Sellers got to prove it. Buyers have to give up. I have to see that on a chart. That's not what I'm seeing, but it's if then plays out. If 69.70 doesn't hold, this will be the magnet of price. Again, if there is strength in the market, I am right. The market does have room to press towards that 7,010 very easily. So, right, and then you're just kind of looking for all-time highs. When I say that, and I want to make sure I try to be crystal clear, and you guys know me by enough, if you watch enough times, I'm usually a person that beats a horse to death, right? Where my analogies just kind of keep on going. But I'm always trying to be crystal clear, because that was always my frustration when I was a younger trader way back in the day, but feels like yesterday. Time flies so fast. So that's why, it's one of those things, like things that bothered you in your life as you grow. And that was always a pet peeve. So, maybe I do beat it to death, but that's because a lot of times the vagueness that I see of traders, it could go up, could go down, could go sideways, kind of bullshit. And, all these big zones, and zones are like 10 points. And, that just, how are you going to trade that? I really thought that was kind of disingenuous. Anyways, rant over, squirrel. But in today's context, remember, today is the day before FOMC. We had a strong push in Sunday into Monday. Today's coming in. I am not expecting a lot of tempo, right, to come in strong. And again, this is where a lot of things converge at one point, where you have the strong skew, right, one-sided late longs, and this is where then how the setup transforms in context of the Fed interest rate tomorrow, in context of, right, the skew, overnight inventory, where we are in price, in the overall structure of volume profile, and how day trade type 6 plays in. That just gives a good recipe of a high probable trade in today's trading. So let's recap. Today is another day where the best trades are earned, not forced. Let the open develop. Respect gap rules if they are in play. And again, hunt for the pullback, but only when it reaches a level that creates fear, shakes out weak hands, and shows you that buyers are absorbing. That's how the easy trade environment talks. That's how the easy trade environment everybody talks about, but few execute correctly. So with all that said, take a screenshot really quick. I'm going to take a sip of my protein shake. For tomorrow, watch for the volume and volatility die off by noon yeah, that always happens, Henry. Very good point to let everybody know that. Again, tomorrow, which I'm sure we'll talk about, that'll be a very, right, if you're going to trade FOMC days, usually it's the initial balance, really until like 11 o'clock. That's the good trading. If you don't get in, or it doesn't set up correctly in that first hour and a half, then it's a just, go to the gym until 2 o'clock. Because really, like Henry says, there's nothing really to do between noon and 2 o'clock. I mean, literally, the volumes and the volatility just dies right off. So he's completely correct in saying that statement. So I'm going to come back to this because we're going to talk about a couple of trades or some stocks that I'm watching for, not only as a trade, but also there's a couple of them to put in the legacy portfolio. But with that, I want to jump to the volume profile chart. Right? Very easy to understand today's, right? We did have that strong move up, right? A small pullback into the close, right? Again, so look at how price, right, pushed through. We got single prints on the chart, right? They took it up higher, and then later in the day, right, towards the end of the day, small pullback, opened up in the overnight, and again, burping, excuse me, that 69.70 holds. So again, right, we've got a strong move, hold a pullback, strong move into a range. And this range has high, long skew in the overnight. So again, you're looking for a liquidation break, right? You'd want to hold that pullback and then you continue on. That's the essence of the trade. Now, this is where it gets complicated, because does today end up, because of the context and because of how we're setting, this pulls back, but this pulls back so slow and grindy, and right, it's all day like this. And then maybe we come up and then we close right into here, which sits at 69.85. That is, right, kind of the gap rule, day trade type 1, moving into day trade type 6, and playing that whole game out. And this is, even though in the context of being bullish, right, there is a short setup in watching that play out. Now, if it happens, this is the thing. There is market tempo that's very crucial in the rules on this setup. So this has to be a grinding pullback. So if tempo is rough and this is grinding action, but it's a grinding, descending grinder, right? Then understand realistic expectations, and this comes back, and then this will probably be something where maybe it's a late day trade, and then that's the buy for then going into tomorrow, right? And then we find ourselves back up here into tomorrow. Let me play this all out, because again, grinding down, pulls up, closes in the overnight, we come back up, another range. And then this is where then the setup becomes dependent on what Powell says. And you kind of have to kind of be late to that trade, but understanding how that plays out. Because then we move into tomorrow, and like how Henry's talked about, the volume fading off at around that 11 o'clock into 2 o'clock. And then, right, depending on where the VIX is, again, I'm going to probably say there's a lot of options flow that's going to really determine this. And that's where you get, right, VIX pulling way down, options flow comes in, and that's where you get the big move at around 230, 230. And that's where we really get the momentum going. And/or has a very also 50-50 probability that rolling down. So yup, could go up, could go down. The only reason I'm cautiously bullish And again, there's a lot of things that are playing out this week. So I'm trying to be very nimble, as well as be as brutally honest with you guys that I can. And this is where a trader, you have to be a trader, because you have to understand the context and you have to be very nimble and flexible, right? And don't get too hardcore biased, because I'm going to show you this real quick. Let me show you that real quick, because I think that is important. So let me go to, this is going to take me, because this is exactly, let me go back to the dashboard. Let me open this up. And then let me to expected move. So I don't know if you guys can see that on here, right? But there is an expected move on Friday's close into Sunday's open, right? Of this expected move, right? So again, and we're here. So as we play and trade today, and then you got tomorrow, you are going to be up here. We're at this upper level. So, and you're already, kind of at the upper level on the expected move. So what again, I'm just the way the market's trading, I just think there's a lot of options flows that are controlling the market and passive investing flows, more playing the market than actual initiative, institutional conviction, pressing trades. So when I'm thinking about that, I really do take into consider, how are the options positioning, and, with the expected move, and this changes, but, I really do the expected move. And I'll kind of have, I've been wanting to do a video on this. And so maybe, hopefully soon, when I say soon, maybe this week, next week, but this is just something that is part of my trading on Sunday, or actually on, somewhere between the weekend, Friday and Sunday. I usually try to get what is the expected move in the option chain, and right, like what is the, again, thinking distribution curves, right? Like what is the one standard deviation in, option chain positioning, and just to kind of get a gauge of what, right, where people are putting their money where their mouth is. And so in saying that, right, this kind of is the levels. Like this is the low down here, this is the high, and we're sitting up close to it. So not to say that you can't get, right, with Powell saying something good or bad or however, the move up, and right, you're taking out that one standard deviation to the upside, and it's a tails event, can be. But again, I'm always a probabilistic trader, and so right when we're sitting up here, I'm very carefully watching this, understand the price action is bullish, but really watching on a very faster time frame if I am able to see failure. And if I'm able to see that failure, right, this would be selling high for a move, and right, you got great risk to reward. But that is counter trend to the trend now. So I don't want to get too overly, ahead of myself, and price hasn't shown me yet, but I am watching very carefully for that to set up and play out. Otherwise, right, as far as price goes, that's not telling us to do that. And let's go to the trigger chart. But before I do that, I want to go really quick to this. And again, just to clarify, just to show you, so you know what I'm looking at, right? That 69.70, and you got these single prints. So again, as price, if I'm correct, and we get this drag, it's going to be very important for that to hold. Otherwise, right, this comes back in. This is very weak structure on the chart, and then this would be the magnet to get where it gets sucked down to, right? That 69.44.75, which we already have talked about, really all Friday. So that should not be anything new. But so just showing you that on the chart. So with that said, let's go to the trigger chart and we'll quickly finish this up on the trigger chart, finish up on the ES, and then I got a couple stocks that I want to show you guys what I'm seeing and where some opportunities lies with some single stocks. Again, right? Pull back off that low, and now we're trading in that range, right? And this is, Fight Club, right? So there's nothing to do in Fight Club, unless on this chart you see that failure. So again, where we open up, day trade type 1, gap rules, we've talked about that. I'm not going to get too much into that, but we open up, and do we get that open up? And right off the bat, there's a way to signal failure where we open, right? Get an opening drive, failure, open and drive, price comes back through, right? Short with a stop above, and then, right, get that long liquidation, right, off the bat. And then again, like moving down into 69.70. If that happens fast and early, right, then that 69.70.5 really comes into play, right, for the move back up. Watch as we get back into balance, right? Make sure this doesn't end up being, where it kind of sticks and sucks us in. But again, with the tempo, what I'm hopefully trying to save you from is where you're not able to recognize and this becomes like super choppy and not clean. There's not nothing on the chart to show you that, but where you just get this move down and then they take it back up and then it moves down. We chop around and then it moves down and then, right, a little bit down. Oh, they swing it back up. You get stuck up here and then it's down, right? And then it's just this grinder channel down, and in the meanwhile you're getting chopped up to bits, right? Where you got to stop, over an inflection, they take it, then just to move back down, right? But now you can't chase it lower because now you're really, you're kind of close to the lower end. I mean, there's just all this chop. And so if you are recognizing that, then, again, understand, recognize, maybe trade lighter size so you can, play around in the chop and be, not so jittery, calm your nerves down. But I really feel with the context that we have, that being, right, where it's a pickpocket day, where market makers, pickpocket all these retail traders, and it's a grinder in a descending channel kind of type of day. Again, I'm really looking for the pullback, and I can't get a small pullback, not in today's context. So if that happens and the market just gives me a small pullback and then takes off, then it'll be another day I won't take a trade and I'll just watch it. And more than likely I'll find myself doing something else. I got a lot of research papers that I got to do, market trading report that I got to do for the month. I got some real estate data that I got to do for the wife's brokerage. So there's anything I can do. And so that's what I'll do. I mean, if you don't got anything to do, go outside, do something, go to the gym. But if market just gives a shallow pullback, that's not enough risk to reward, and it'll just take off without me. And just to be, brutally honest with you guys, I won't take that trade. I have to get a something of a juicy pullback into here, or right, again, something that tells me that there's buyer failure. I can take a short and then watch this level. Do I flip? And does this get sucked down into 69.44. From Sunday's move into yesterday's high, when I look at this in a little bit of I open the chart up a little bit, this move here, this has me screaming, right, to be patient for something that really gets a juicy pullback going into the trade. So even this, I am going to be sketch on. I mean, I got to let the chart prove it to me. There's things, but I am so cautiously bullish that, I am not convicted, aggressively looking at this market. It's more of, I constantly am finding myself where it has to constantly prove it to me. So, and then I got to just do risk management and risk to reward. So I need a juicy pullback. That's what I really need. Otherwise, it can kind of go, and I'll wait for a juicy pullback tomorrow or something, or the next day. This isn't where you got to trade every day, and the setup's got to be right. So day trade setup 1, gap rules, because that's what it tells me. Gap rules are on play. And then 6 going into, if I'm wrong, then it's 4. But I'm really looking at taking advantage of 6. The difference in the maker is this going to be a hard grinder, or are we going to get something that's, the trading gods give us a nice, easy, push, nice push pull back. And then when they do pull back, right, they really take off with it and kind of make trading a little bit easier today. I'm just in that mindset. I doubt that's going to happen. So I'm just kind of giving you guys realistic expectations. With that said, let's go to the dashboard again. William, what do you got? Bottom range, if you calculate the point of control to the low of the range, take that number, add it to the bottom. You see yourself targeting. Have you yourself a target to the upside? Yeah, it's 7,010. Henry, sounds stupid, but it worked so many times. Yeah. I mean, you're just looking at. I mean, so I would say I'm sure what. Right, it's almost like a pendulum swing. Am I understanding that right, Henry? You're almost thinking it's like a pendulum swing. I would imagine, right? There is a psychological where you get a range that develops, right? And then if price moves down, say here, and comes back up, and I'm sure this is, and you can tell me wrong if I hold it. I think holding pattern to FOMC, I believe in the break to the upside until pushes above the high, retest, continues up. Yeah, I want to say if I'm reading you right into that point of control, right, and then it just becomes like that pendulum swing. No, normal distribution fills out. Oh, you're just saying, yeah, you're right. Yeah, because you're talking about, let's go to this chart. Let's go back up here. Let me make sure I'm reading you correctly, and for other people to kind of understand that's in here. Yeah, you're just talking about, right, this is off of Sunday, this distribution filling out. Let me know if I'm reading you right, Henry. One of these times, maybe we should do like back in the day with Team Day Trader, like back in the olden days. We had the mics all open up to a couple of you guys where we could openly talk on the mic and it would feed through the stream. Because I know a lot of you guys are smart cookies, so I appreciate you guys coming in here listening to me. But I know sometimes it's always good to get, have you guys talk on the stream and get, have other people listening to, your guys' good ideas. So I know that was good times back there, and I enjoyed it, and I think other people enjoyed it, especially when we had new traders come into Team Day Trader, right, where you not only had me and Pete kind of talking, but you also had other people and right, express their views, see something that maybe me and Pete ain't talking about. Yes, prices hanging around the point of control, fill out, upside, normal distribution, bottom is there for now. Yep. Yeah. Yep. Until tomorrow. All right. Yep. Agree. So, oh, what do we have? What do we have? Oh, let's get back to that dashboard. It's 9:07 on the time, and I do want to get these out and have these archived on. So I am looking at this USAR, right? I do like, right, where two try consolidated and then they pushed out. And this is on my watch list as I'd like to get, right? This is a day chart, and I'm looking for this to pull back and give me something to kind of, right, a nice juicy pullback and then to continue. So one day, this isn't enough of a pullback. This is too shallow. So what I'm looking for is today to come in, and can we get a little bit juicier bite on that, get a pullback, and then, right? So, this isn't nothing like, hey, screaming right now. I'm trying to get ahead of it for you guys that this two try holding that low, move up, this consolidation is a very bullish pattern, and then they break out, right? And technically on this red day, right, they broke out, pulled back, held the pullback, and then took off. And so now what I'm looking for is that a little bit meat on the bones. You know what I mean? I kind of get greedy, so I'd like a little bit more meat on the bones, and then, right, for the continuation move. So I am really watching this USAR. Keep that on your radar. The next one I want to talk about is DraftKings. We do have the Super Bowl coming up, and I just really like the setup. When I look at this on a weekly chart, and I'm looking at it here, right? You kind of have this range, right? And you had an overshoot, an undershoot, and then we're coming back in, and then, right, for a move targeting back to 48, right? And again, this isn't going to happen in a day. This isn't a day trade, but a nice swing trade, whether it be 2, 3, 4 weeks, right? Again, this is just setting up, and it's an easy, risk to reward, where if you're wrong, great, get out, no big deal, right? But, flex in, say, $4, for $18 is nice risk to reward setup. I think context in DraftKings with Super Bowl coming up, high probability of at least a decent bounce, get into 36s, manage that trade, monitor for continuation, and then really see if DraftKings gets a little push in this trading range. And this is a weekly chart going back, 3 years, right? Going back to 2023. This isn't, it's not a momentum kind of trade, but this is a range trade price action where, right, you sell the highs, buy the lows, sell the highs, buy the lows, sell the highs, buy the lows, and then sell the highs. It's range trading. It's not, it's not momentum trading, but it is range trading. And this just looked like it was really just in, kind of the setup with especially with the Super Bowl coming up. That could be a very optimal trade. Smith & Wesson, this is on my radar. This is a weekly chart. So again, it's kind of it's been bearish and not very, great of a trade. And this is again, and when, this is a weekly chart. So again, you have this kind of $18 at the high, $7, $8 down here at the lows. And this has been that kind of sleepy, probably hasn't even been on your radar kind of trade. And we're at that $11. And I am just watching this. This is on a watch list for me. And something that I'm looking at, throw in the legacy portfolio for a while, as long as this sets up. I got to do a little bit more discounted cash flow analysis on this, just kind of, do a little bit more due diligence on the financials some anyways, God, I hate this getting old. It slipped my mind, the word. Anyways, this big move up, a gap and go, and then a nice pullback, so I'm just watching as how this plays out. Does this give an opportunity where they just, for whatever reason, right, kind of fill this gap before they really take off again, and again, get something juicier, even if it was coming into like high 9s, low 10s, maybe they walk this for a little bit sideways before they really take off again. I don't know. I'm just watching this chart. I'm just figuring this is definitely something on my watch list. And as I'm, talk to you guys, I'm just live. This is live in real time. This is my thoughts throughout the year or whatever. I am watching this, and I got to do some more work, but, figured I'd share what I'm working on and what I'm thinking, and then give you guys a chance to do your own analysis. But I think doing some work on Smith & Wesson and seeing how that plays out. The next one that I want to go to is, and again, because of the week this week with all the earnings coming into play on Thursday, Meta, Apple, the whole gamut, I am watching Oracle as a setup. I mean, this thing has been fairly horrific since September, right? They kind of had that big gap on earnings, right? And then gap in failure. And this thing has been just losing people's capital, right? But we went from 345 down to, again, 182. I want to do a little bit more analysis. Usually what happens is I start out on charts where they look good technically, and then I kind of take more of a little bit deeper dive, do some deep dive in the financials for like a financial analysis, just to kind of help confirm. But I do like the way that Oracle is kind of setting up on the charts technically. When you take this out on a longer term, this is a nice, right? Again, if you come out of a base, you push, you pull back, right? You then push again, pull back, and then you kind of get this like kind of parabolic move. This is a nice retracement, right? This is a nice, in the future, you'll look back at this, and that was kind of the nice retracement that you're really looking for. Now, is this just a retracement, or is this like, hey, Oracle's dead and, they're bleeding capital like crazy in CapEx over AI, and this thing is like going back to $80? That's why I say I flipped through a lot of charts over the weekend. This just kind of caught my eye, something to take a look at. The other one was, we talked about this on Friday, obviously with earnings, and I was, again, what I would say constructively bullish, where, again, this is a weekly chart. You consolidated down here on these lows for a couple years, right? You get this push up, right? Pull back, small push up, pull back, and then a really nice push, and then earnings. I just think this is like just giving you that same lucrative buying opportunity where you're looking for a good retracement, right? The problem that I always see people get themselves caught in, and I'm just going to do a little small rant, is this is the move. And what happens is people are always scared to buy this retracement, scared. And so what they do is they end up buying here, right? They almost like, I want to see it confirm, and then a day or two later, and then they're buying close to the highs. And then what happens is they get in late, and then it kind of pokes up, and then it retraces again, right? And then to take off again. And that's, and I find that usually is some assessment. And instead of taking, this a juicy retracement, they kind of don't optimize on that true inflection low, and then it comes off that low, and then they get in at like $50, right? So instead of getting in here at like 40, 41, 42, right, they kind of get in at like 50, and then it kind of pokes up above, maybe goes to 57.5, and then comes back down to like 47.5, and then goes back up. And then again, like they kind of get, you get chopped up. And so, try to not get yourself in that pattern. You want to get as close as possible to those inflection lows. And again, if you're wrong, and this actually is a reversal, like a true trend reversal, then yeah, you're going to be wrong. This is going to go down, and we're going to come back here to $25, and you're going to get stopped out. But in the course of trading days, years, decades, I'm going to tell you that this is where you're going to want to get a habit into, and not, waiting too long for confirmation. That's why I say, like, this is a weekly chart, dial it into a daily chart, and then you'd want to dial it into an hourly chart, right? And this is that kind of, this is it, where you had that low, we're coming into the hour, here's a high, and you want to, you don't want to get in like, oh, wait until up in here, right? That's bad trade location. You want to dial this in from that weekly, from that daily, from that hourly. And again, this isn't a day trade, so we're not day trading this, because I'd like to kind of leave it on. This is that swing trade slash, maybe stick Intel into the legacy portfolio. If you got stronger conviction that the company has really kind of changed its ways, and we're talking about Intel here. So, I don't want to get too crazy. It's not like this is a momentum stock yet, but it's constructive, and I am watching that. So I know William brought that up on Friday. I was watching that price action on Friday, and then I was also watching it on Monday. This was Friday, and then I was watching on Monday, and then just over the weekend taking a look at this, and I really like this retracement. I mean, we're getting down into these highs and lows from earlier in the year, and if it's going to hold, right, and still stay in a bullish range, then this is the juicy retracement that you want to see. I mean, I don't even know because I'm not a Fibonacci trader, but I know there's so many people in the world, they like throwing these fibs up. I mean, right there. I mean, you got a nice 61.8 fib retracement. So, not that I'm a kind of fib kind of guy. I'm really not, a big high conviction Fibonacci technician, but I do know in the world there are people that seems to be. I kind of feel like when the theory is so simple, stupid, whether it be the two that I just annoy the shit out of me, rant, so squirrel, is Fibonacci and Elliott wave. And I just believe that the theory is so simple, stupid, that even a caveman can understand it. And so that's where people latch on, because you start getting into auction profile, you start getting into Wyckoff, you start getting into the harmonic patterns, things like that. It's so kind of over people's head that they just kind of go back to simple, stupid. So maybe that's just me ranting on whatever rant. But, when I've back tested, and I think my biggest argument, and we're going to go back to Fibonacci's, right? Because I've studied that theory in detail. My biggest gripe in Fibonacci is nobody has specifically gave me specific rules on where you anchor and where the correct anchoring of the Fibonacci retracement itself, right? Because only in the future or after time has passed, like when this was 55.74, right, in real time or things like that, like after prices already moved, then you're like, oh well, then you anchor. It's like anybody can read a chart after the price is printed. But if you're actually trading in real time, it's very hard to extrapolate your anchoring in on the chart. It's only after a while, almost like it's a too late to the party while, then it's obvious on the chart. It's like, oh, this is where I need to anchor the Fibonacci. But in real time, I haven't had anybody come with a good rule set on, hey, this rule, these rules, boom, 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 and this is how you anchor it. It's more of a, which I could see somebody arguing me, it's more of an art than anything else. But, I need higher probabilities. There's better theories out there, and to waste your time. But I do encourage everybody to dig into it, because you got to have conviction. I have strong conviction that that's a horrible theory. But teaches their own opinion, I guess. With that said, it's 9:23. Market's going to open up. Hopefully that was helpful to you guys. Again, if you're new or you don't know, you can reach us at our Myrtle Beach location. That's our office. Is our office address. This is the office phone line. Anybody who usually knows me, I know Henry has my cell phone. I know if James is watching, William has my cell phone. If Lisa and Earl, most people, they got my cell phone. I'm a very open book kind of guy. This is the email address and the websites, all there on the side, so you can go and dig yourself. Hopefully everybody has a good day trading. As always, learn, trade, profit, and we'll see you guys in the morning tomorrow. Take it easy.